What's going on, everybody? Welcome to the Afternoon Brew, where we're going to be putting out afternoon videos every single day of the week, but Tuesdays and Thursdays, we're going to be doing some live interviews with some experts and investors of the crypto field to help you guys maximize all of your crypto investments. So, in case you're wondering, this is live right now. We're going to go about 20 minutes, but the whole point of this series of videos on Tuesdays and Thursdays is to help you guys continue to maximize your profits. And today, I'm really honored to be joined by a good friend of mine named Courson. And some of you guys have probably never heard of his name. In fact, most of you probably never heard his name, but you're going to see a lot more of him on this channel because I truly believe that he has some great insight into how you as a Bitcoin or Ethereum or Cardano holder, whatever you hold, can maximize all of your investments and know not just what to do at the bottom or the middle or the top of bull markets or bear markets, but at all times you know how to be investing wisely and make the most profit while protecting yourself from losing money. So with that being said, before we jump into details, Steven, I want you to just introduce yourself and let everyone know what your history looks like when it comes to investing and what brought you into the world of crypto.
Yeah, thank you so much, Tim. I'm excited to be here. So I started in crypto in a slightly different way than a lot of other people normally did. I actually started investing in 2017, and it really had nothing to do with trading or anything like that. It actually had to do with the technology, because my background, I did 14 years in the tech consulting space and tech sales as well. So I actually came upon crypto because I was actually researching blockchain. And one of the things that I learned early on, and unlike few people, my first crypto back in 2017, when we weren't, telling our grandmas about it at Thanksgiving dinner, was the fact that I did not buy Bitcoin first. I actually bought Ethereum first, because I saw Bitcoin. I understood what the general, gist of it was, but I was still a little concerned about governments might shut it down, or, I'm not really sure if this is really going to pan out. Let's see. So I was watching it, but Ethereum to me really stood out because I saw the disruptive power of that infrastructure. And that's what's really got me interested in there. So I bought my first $8,000 of Ethereum back when it was at $50. And what ended up happening was I, just kind of played the market. And back then, I mean, we were seeing 50 to 60% swings in a day, let alone certain other periods of time. So that was definitely an interesting ride when you're, used to the stock market doing anywhere from 1% to 4% in a day, depending on what you're in. So I was just really interested in the technology. I was really interested in what it was doing. I knew this was something I wanted to invest in because I believed in the disruptive power of it. And didn't know if it would make it or not. It was super speculative, but I put my money where my mouth was. Like I said, started with $8,000. My money went up 100%. And I said, you know what? This is still incredibly risky. We don't know what's going to happen. I'm going to take out my $8,000 and I'm going to leave the $8,000 profit in there. And now I'm just playing with house money. So I wasn't worried. I was literally sitting in a position of I could lose it all. It could go to zero, and it's not going to really have any impact on me. And because of that, I was able to, hold it for a lot longer than I normally would. So that's how I ended up getting into crypto. I was working literally with the first time I ever heard blockchain. I was sitting in the office with one of these analysts that we use in the consulting firm, and we started talking about blockchain to the CEO and the CIO of a multi-billion-dollar bank. And, we're in this big room, and I'm going, oh, blockchain, that's interesting. And then next thing you know, across the company that I was working for at the time, we have a search portal where people can look up research. Blockchain and crypto specifically became the top searched terms of, and this is very expensive research. You have to pay hundreds of thousands of dollars to get this stuff. So it's not like Joe Schmo looking at it. So C-level executives and their vice presidents of all industries were searching for this and made blockchain in 2017, 2018, the number one search term across everything, even more so than artificial intelligence, which was huge at the time. So I knew that this was going to be coming down the pike, and this wasn't going to be a fad. This was going to be something serious.
Wow, dude, that is awesome. I'm super excited the more you get to come on this channel and tell more of your story and more of how you view the market, because I love when people see things differently than I do. They're coming at it from a different angle. Their reasons to be here is very different than mine. I love hearing those diverse opinions. But I want to start off, I know we kind of talked about where we're going to go with this interview, this short interview. I'm actually going to throw a little bit of a curveball at you before we dive into maybe some more specific tips.
Bring it on. I'm a great basketball player.
There we go. Yeah. There was something we were talking about the other day. I remember when I was getting to talk with you about your history here, and the word you mentioned it earlier in your answer, and the word volatility. So that's pretty big in the crypto space. And it's funny because you were kind of talking about how you laughed at it, where people look at the volatility of crypto and they're looking at the days when it only moves, 10 to 15%, and they're like, oh, it's a small day. And you're used to the stock world, the finance world, where if you get 10 to 15% increase or decrease in a day, that's a massive move. So I want to start off by maybe getting some advice from you on mindsets that people in the crypto space should be utilizing when investing, because even though it is a more volatile space, you can still learn from the wisdom of patience from the stock market to utilize and make the most gains in crypto.
Absolutely. So a lot of you may be familiar, if you're tracking volatility, with the VIX, and that it literally tracks volatility in the stock market. And we see, I don't believe there's a tracker specifically for any specific crypto with that, but generally the volatility index is just talking about how people, human beings, are feeling about investing at the time. And the volatility index, there's a lot of correlations and gains there. So like in crypto, it's a different world right now, but at the same time, the same rules still apply. So what happens is, sure, when I'm investing in the stock market, that's a lot more of a conservative investment, even if I'm in something like a triple leverage fund, like a TQQQ or whatever the case is, that may fluctuate 3x the market. So that one may do 5 to 7% in a day. But in general, the overall market doesn't really move much more than, if it moves 2% in a day, it's making every single headline, for every major publication in the world. If the crypto market does that, it's a Tuesday. So the important thing to keep in mind with volatility is that you obviously, there's a lot of traders on here, and everybody knows that, hey, we like the big fluctuations up and down, all that kind of stuff. But the one thing from a mindset perspective you have to think about is, what is my goal? So when you're trading, you have to know, like, what is it I'm trying to accomplish here? Because if you don't start with the end in mind, then you're just going to get wrecked by the volatility, because you won't be able to define any rules for yourself when you're investing. An example would just be something like, okay, I am going to get into this trade and I am going to, put a stop limit on it, and I'm willing to lose 2 to 3%. But I'm thinking that it could go as high as 15. And once it hits 15, I'm going to sell it. So when it comes to volatility, in the stock market, you may have that exact same mindset, but it may be, I'm just hoping to make 5% on this trade, and I'm only willing to lose 1%. So the rules are still the same, but the amount due to the volatility is what will change.
Yeah, that's a good word right there. And again, I think it's really interesting to get to hear again from somebody who their eyes are just like, what the heck, like 15% in one day. People who just started investing and trading in crypto, they never did stocks. They think that's like a small, like you said, that's just a normal Tuesday. But it's always good to remember, hey, these are special times. We are still early, and there's some things, like, I think sometimes the other one is that people forget. They almost act like they don't take advantage of a really good opportunity, they'll never get one again. And it's like, no, this is crypto. Like, learn to prepare for the long haul. Don't get disappointed when you miss out on some short-term stuff. But let's go ahead and transition, and I want to just kind of open it up to you. I know you have some notes planned. What are some tips and tricks that you suggest for every single investor out there, whether they're a DCAer or they only buy, they try to buy as a macro bottoms and sell macro tops, or they want to trade every single day? What are some tips and tricks that you suggest that every person starts to utilize? Because there's this whole thing of, like, in a bull market, it's really easy to buy low and then get to a certain place and sell high, but it's about planning for your long-term future and invest to not only make your profits, but hedge yourself so you never make significant losses either. What are some things you recommend every single person start doing today?
So the very first thing, no matter what you're investing in, I don't care if it's Pokemon cards, I don't care if it's crypto, I don't care, it's those little Russian dolls that apparently are really popular, you put them in each other. whenever you are investing in something, you have to have a financial foundation. And I define a financial foundation as anywhere from 6 to 12 months of your monthly expenses saved up. The reason that is so important is because if you don't have that, when you're in a bear market like we are now, as good old Uncle Warren Buffett likes to say, when the tide goes out, we get to find out who is swimming naked. There's a lot of people that were swimming naked. And basically what's happening is, and the reason I've been able to hold through this, I didn't have to panic sell. It all comes down to the fact that I had a financial foundation. I knew that if the worst case scenarios happened, I lost my job, my cash flow dried up, I wasn't able to find another job for 6 months or anything like that, I wasn't going to have to tap into my investments and sell them off. Because what happened, and what so many people made a mistake on this year, is because they thought the good times are just going to keep on rolling. They leveraged themselves too much. And then they got to a point where maybe they lost a job, or maybe they took a pay cut, or maybe things just got really freaking expensive and they had to take out credit cards or sell some investments. And now they're in a negative position. When you have that financial foundation, you have the confidence. And we all know that trading is about mindset, right? The best thing you can do when it comes to trading is to have the confidence that I'm good for 6 months. I have money set aside, and I can hold on to this trade if it dips down below what I want, and I can take some risk, because that's what we're doing here. So that's first and foremost the first one.
Awesome. That is really good. What are some other things? I know there were some strategies you told me about that you experienced early on in your Bitcoin journey that really helped you make sure that you're profitable. You're staying profitable and not losing any money and never going negative.
Right. Yeah. So basically what you have to do, and I won't say never going negative, but it's because I've definitely put more money back into the market as it's matured, as I've, learned more about it. I was laughing 2 years ago when all the banks were throwing the FUD around, saying, oh yeah, the crypto, it's going to go down, it's getting banned. Meanwhile, like I said, I'm following the technology going, these guys are filing patents for their own blockchain, their own, different stuff in here, the, funds to be able to trade Bitcoin. We knew that it wasn't going away. It was funny. But the other big strategy is you have to ask yourself, why am I investing? Back in 2017, the reason why I was investing is not the same reason I'm investing 5 years later in 2022. So every year I encourage people, whether you look at it from a 6-month view or you look at it from a 12-month view, look at it in those timeframes and say, why am I investing? And if the reason is something like, I'm a full-time trader and I'm investing because I want to pay my bills and I want to drive a sweet car and put a down payment on a house someday, or whatever the case is, okay, that's good. Then if that's what your goals are, identify how much that's going to cost. So let's say you go, okay, in the next 12 months, I want to put, get myself a new BMW and I want to put a down payment on a car. Which BMW, which house, or at least how much are you looking to put down on a house? Now, how much does that add up to? Okay, that's all going to add up to 80 grand. Great. Then you have to define your strategy up to that $80,000. The problem is people just get into trade and they're just kind of going like a leaf on the wind, and they don't know what it is they're actually working towards. Again, this is about setting up rules and guidelines. That's how you don't get emotional. Emotions are the enemy of trading. So the ways that we remove the emotions is by following systems and having rules. So it's the same thing like walking into a casino. One of my rules when I go to a casino is I don't take my debit card or my credit card. I walk in with the amount of cash that I am willing to lose that night. And if it's $500, I'm willing to drop down on the table. Hey, guess what? I'm out here having a fun time. I put it down. If I lose it all, I don't have any regrets. I would have regrets if I didn't have rules. And then I went back and I kept swiping the card and like, oh man, I'm going to win it back. I'm going to win it back. No, it doesn't work that way. Trading is the exact same thing. So you need to be able to have rules set up for you when it comes to that stuff. The other one that goes very much with that is your risk profile. Now, if you're in crypto, you have an aggressive risk profile to some degree. I mean, it's a very speculative investment. But even within crypto, you can be a conservative investor and say, I'm just doing Bitcoin and Ethereum. Those are the most stable, right? Or you could say, I'm going to go aggressive, and you're working on some of the smaller caps that, The Mines of Delarnia was one that I found a little while ago that I was getting into, or D-Race or something crazy. So, where you're looking for like a 5, 10x, 50x, whatever the case is. So that would be the other one, is identify your risk profile, and that should tie to your goals, and that will adjust what you're willing to win or lose. And then the last one, like I said, is simply just stating, what is my goal? So when you know your risk profile, you know why you're investing, what's the goal here? Is it to earn a specific amount of money? Is it to achieve financial freedom? Is it just for the rush of it? Some people, let's be honest, some of us are out here just because it's fun, and that's what we like doing. So once you identify those 4 things, and I'll just summarize them again real quick. So your financial foundation, why do you invest? The risk profile that you have, and then what's my goal? Once you do those 4 things, you will have a very strong basic profile that will help you set up rules and guidelines and goals for yourself. And that will enable you to make better decisions when you are trading.
Wow, dude, that is so fantastic. I loved every bit of this. Now, the whole point, though, guys, of these live interviews on Tuesdays and Thursdays, is we want to be short and sweet. So we're going to be wrapping it out here, but I wanted to leave it. Steven, was there anything else you want to leave our audience with before I let you go for today? And after that, we'll wrap out the video.
The big thing I'd say is, just during a bear market like this, don't get too discouraged. I'm 35, so I have a very interesting situation where I am now going into my 3rd recession. And, a lot of people, if you are right around that 21 to 28 range, with the exception of the weird blip that was due to COVID, the recession that was 2020, this is your first recession, and you lived through the greatest bull run in the history of the stock market in the United States. And because of that, people haven't experienced what this is like. So what I would just encourage people is, during this bear market, learn the lessons. There will be more of these, and that's not a bad thing. These are great investing opportunities. They may not be the greatest trading opportunities. They still can be, absolutely. But this is the time where investments can really launch your wealth to a different stratosphere, because things are on sale. If you believe in Bitcoin at 21, if you believed in Bitcoin at 68, you better believe in it at 21. It's as simple as that. So that's what I would just tell people. Don't get too discouraged by being in a bear market like this. At the end of the day, this is a natural cycle of things. I will leave it with this. I always use the analogy of forest fires. Forest fires, when they're happening, seem completely destructive, and they seem like terrible things. The reality is that they're incredibly important for the forest to grow. They burn away the underbrush. They make room for more and healthier trees. They kill off the weak things. That's exactly what crypto's doing right now. There's over 18,000, 20,000, something listed on CoinMarketCap. Let's be honest, the majority of those will never have any real utility. They'll never make it. We need to get rid of, the bad ones, and we need to focus on the investments that are really going to have some strong utility in order for them to continue to grow.
Wow. Thank you so much, Steven. It was such an honor to have you on here, and I'm going to have you on again really soon. Everybody else, if you want to hear more from Steven Courson and learn more from what he is saying, make sure there's links in the description down below. You can go check him out on his YouTube channel and his Twitter. Go subscribe to his channel, follow him for more content just like this. Also, before you leave this video, make sure you smash the like button. And if you want more content just like this, subscribe to the channel and let us know in the comments section what are some other topics that you would love for us to discuss. The whole purpose of these Tuesday and Thursday afternoon brews is to accomplish what we call #FinSov, or financial sovereignty, where you have control over your money, not your money having control over you. If that's something that you want to have in your life, subscribe to the channel and engage with us every single day as we continue to build this fantastic community of helping each other accomplish that #FinSov. With that being said, though, guys, that's all we have for you in this video. I'll see you in the next one. Peace.